internet of value at Ripple, we're thinking much bigger than just cross-border payments. It's kind of like Amazon with rare books in the early days, just this market happens to be a $10 trillion market.
We are at a historic turning point.
Said in the past that you are doing for money what email did for communication.
Moving the whole revolution forward.
Take on it.
There's trillions of dollars parked around the world.
XRP.
Is there a possibility that Ripple could take over Swift one day?
Well,
welcome back, ladies and gentlemen. So far, script. Let's get right into today's video. We have found another puzzle piece to our USDC XRP, and now it is Fedwire, and they're getting ready to scale. And are you ready for this volume? We have some numbers: $4.2 trillion daily. Welcome back to another episode. This one is going to be mind-blowing. We're going to do some calculations, and I'm going to show you hardcore evidence that Ripple, XRP, and regulation, and all these entities behind Ripple, they're setting up for a major shift, and the world is going to be in for a rude awakening when everything is ready to go. Ethereum and Bitcoin will not work, and I've said this many times on this channel. But take a listen to what David Mills says here. He has been working at the Federal Reserve since 2002, and currently he's looking over digital currencies and DLT innovation in payments. Listen to what he says here.
Would financial services be worried about the use of permissionless blockchains?
So one of the things that, again, from our research, we highlighted some of the key challenges or issues that you need to think about for the payment system. And a good governance structure is key. And I think anyone who kind of witnessed the DAO episode with Ethereum last summer, you can't create that kind of uncertainty in the U.S. payment system. I mean, you can't replace the existing architecture that has integrity and reliability and replace it with something that when something happens that you didn't anticipate or there was a mistake that was made, that you take months to figure out what to do. I mean, it's just not going to be acceptable in the U.S. payment space. So I think, unless there's good governance structure put in place, then you're not going to really make a lot of headway with an open permissionless system.
Having that type of uncertainty in a payment system, especially when you're about to scale it into the billions and trillions of dollars, you cannot afford to have that risk whatsoever, because money makes the world go around, and to have a system outage like that is horrifying. That is like their worst nightmare that they could have. So that is why the XRP ledger and XRP have been quietly and silently building a track record within large institutions, creating integrity and reliability and creating a certainty for them. Listen to what they said here. So we have some fresh numbers here from the Fedwire Fund Service. And if you guys recall, this year, just last week, USDC integrated on ACH and Fedwire. And you guys know what's going on with stable coins and Brock Garlinghouse staying silent.
But when are you going to move into stable coins?
Yes.
When?
Yes. Look, I think the stablecoin market is fascinating. Will we do or say more than that? Not today.
And I might even cover the potential of a stablecoin issued by Ripple. Let me know if you guys want to see that episode. But let's continue. So USDC is being integrated on ACH and Fedwire. And Fedwire is posting some significant numbers. We have Jeremy Allaire making that announcement saying seamless USDC interoperability with traditional bank rails built by a regulated bank. This is a monumental shift that a lot of people aren't talking about, that the USDC is pretty much incorporated with Fedwire now, which again, XRP is coming to play a major role. Look at these numbers. The service processed an average daily volume of 784,000 transactions with a daily average value about $4.2 trillion. An average transfer value of $5.4 million. And now let's break these numbers down, because there is going to be a supply shock when you try to scale these systems. We're talking about one system here, and that is Fedwire. Remember, we're leaving out JP Morgan volume. That is $10 trillion overnight. We're leaving out Citibank, which is about $4.5 trillion a day. Okay, so lots of volume and lots of value to be moved around. Take a look at this. So the average value transfer is $5.4 million. Okay, that sounds great. So if XRP is at $1, which currently it is not, so we are speculating that it's going to go to $1, then you're going to require about 5.4 million XRP. So what we're going to do is, to get the amount of average transactions we could do, we're going to keep this very, very conservative. We're going to do 100 billion XRP circulating, which is not, so the price will be a lot higher. So 100 billion XRP divided by the value being transferred and equaling to 5.41 million XRP, we could do approximately 18,484 transactions. But then we're going to run into a problem, because if we're doing 18,484 transactions utilizing XRP, and an average value is going to eat up 5.4 million XRP, then we're going to be utilizing all the XRP, and that creates a pretty much illiquid system. There isn't enough liquidity in the market if XRP is at $1. Logically, what I'm saying right now doesn't even make sense, because the price of XRP has to be high. So I can't even give you this example. $1 XRP, given this amount of value being transferred and the amount of transactions, and we're seeing 100 billion XRP, it just doesn't make sense. And now let's continue on to a $10 XRP. 100 billion XRP we're projecting is circulating. And if XRP is at $10 and the average value is $5.4 million, we will require about 541,000 XRP, which means we could now scale to 184,000 transactions. But again, we're going to run into a problem again. 184,000 multiplied by 541,000 XRP that we're utilizing for each of these payments. Again, we're maxing out at 100 billion XRP. So the price of XRP has to be higher than $10. I mean, some of you guys are going to understand this and some of you guys may not understand this, but it just doesn't even make sense for it to be this cheap. So the math doesn't even make sense. It has to be a lot higher to do these amount of value transfers. And we're talking about just values, and we're leaving out tokenized assets. We're leaving out bonds, insurance, settlements. There's so much that we are leaving out. So a $10 XRP is a joke. It is unsustainable. It will go way higher than that, 100%. But let's continue on to why XRP being regulated and USDC regulation coming is a very, very big thing. Because we have the Digital Euro Association coming out with the stablecoin introduction working paper back in 2022. And if you guys recall, Ripple is a partner with the Digital Euro Association. Now listen to what they said here, because it is very, very important, and it meets all the characteristics that Ripple and XRP has. Such an ecosystem could be expanded to the digital euro, either by having it directly issued on the same platform or by facilitating exchange between digital euro units and those stablecoins by private actors. These exchanges would facilitate the usage of both forms of money. The service would likely be offered by private actors, offering a de facto interoperability at the technical and legal level. Those actors would likely be strongly regulated as a crypto asset service provider and as financial institutions. They may be stablecoin issuers themselves, especially if there are reserve-backed stablecoins. That is so important, what they just said there. Those actors would likely be strongly regulated as crypto asset service providers. And here we have Ripple acquiring custodians. And in a moment, I'll get to that. But remember what the IMF said here, this little riddle about stablecoins. And if they're issuers, then don't they become pretty much financial institutions?
Now, here's the real riddle. If these stablecoins are regulated like banks, don't they end up becoming the banks that crypto assets were meant to replace?
And here they're talking about how they will become financial institutions. And Ripple, let me tell you, they got big plans, and escrow is all within that plan. Because remember the World Bank document that was published? Listen to their third-party escrow method. This model is conceptually similar to the on-ledger escrow, but relies on a third party which is trusted by the payer and the payee rather than on the ledger to enforce the conditional transfers. A lot of closed-door meetings that we are not going to hear about. And here we have an individual from Citibank, Okan Pekin. He's been at Citibank for over 34 years. And this is to the individuals that said, oh, Citi isn't working with Ripple. Well, they are, and this is 100%. Here we have a quote on Matico's website. We are witnessing the increasing digitization of traditional investment assets along with new native digital assets. We are innovating and developing new capabilities to support digital asset classes that are becoming increasingly relevant to our clients. And Ripple is working with Citibank because Ripple owns Matico now. Shout out to Anderson on this one. This is not a coincidence. Here we have Ripple buying Matico. And then here we have HSBC partnering with Matico to offer tokenized securities custody. And then we have BBVA partnering up with Matico again to strengthen their crypto assets in Switzerland. And then Standard Chartered Bank and Sodia Custody partnered with Matico as well. All of this is long in the making. They have a roadmap that the public isn't going to know about, and we are seeing it being rolled out day after day. And to finish off the video, I'm going to play a little clip. Shout out to Crypto Eerie on this one. I came across it on her Twitter feed. This is Eric Van Metenberg, and he's talking about having enough liquidity in the market. And in the future, when XRP is moving billions of dollars on a daily basis and then slowly scaling into the trillions of dollars on a daily basis, there needs to be enough depth and liquidity in the market to do, for example, 18,000 transactions valued at $5.4 million each. Do you see where I'm going with this? Maybe you guys could, if you guys don't understand it, replay that part. But you need enough depth and liquidity to handle real world value from a financial perspective, and that is deep liquidity. And now, Eric, take it away, and we'll be back with another video.
As I mentioned, we do hold a significant amount of this digital asset called XRP, and we will, on occasion, we will sell some of that into the market. That one generates some incremental funding for us, but it also helps create more liquidity in the whole ecosystem for that digital asset. I won't get into the weeds in terms of how some of our products work, but having liquidity in markets around the world for XRP is a big part of what will make our products over time successful. Serves a dual purpose. We measure our success not on the price of XRP, but on how much value we're delivering to these financial institutions. That's largely a function of, are they using our technology to move money around the world? And that curve is going up into the right really nicely. So that's what really gives us a lot of energy.
We started building RippleNet with the thesis that crypto liquidity would eventually be able to support robust global payments, large payments. RippleNet was designed so that customers seeing the benefits of our fiat-based network could flip the switch to ODL once the market was mature enough. And this is exactly what's happening. Flip the switch.
I think what we're building has, it's solving a real problem. And I think all of the tokens, my advice to anybody would be, understand the utility. If there's real utility and there's real value being delivered to a real customer, there will be value in the token.